Do I really need to file an ITR if I just draw my salary income and have no other income? And tax is already deducted on my salary. Is interest income on FD taxable? Do I have to report the interest I earn on my FDs even if I don't receive the FDs till the maturity? What do I do if I forget to submit my investments to my employer? Oof. If these are the questions you are struggling with, I'm here to answer these questions in today's video. So without further ado, let's begin. Hey there, welcome back to the Sonia Dawar show. I'm Sonia Dawar, chartered accountant and business finance coach, and on this channel we share with you all the tips, tools and resources you need to start and grow a profitable business, save lakhs of rupees on taxes and build your own wealth. By the end of this episode, you will know the top 5 mistakes you need to avoid while filing your ITR if you are earning salary income. Now, this video is the second in our series of all the mistakes that people make while filing their ITR. We have already shared our first video in this series, which is 10 most common mistakes many people make while filing their income tax return. So if you've not watched this already, go ahead and watch that episode after you finish watching this one. And if you like the value that we share with you on this channel and in this video, don't forget to hit the like button, and while you are at it, subscribe to the channel and hit the notification bell, because we drop you all awesome content for free on this channel and help you build your own wealth. Let's begin this episode with a quote that says, "A person does not know how much he has to be thankful for until he has to pay income tax on it." With this, let's discuss the 5 most common mistakes that you need to avoid while filing your income tax return if you are earning income from salary. The first most common mistake that many salary taxpayers make is not taking the deductions in ITR or while filing their ITR if you forgot to submit the investment proofs to your employer. So if you are a salaried person, your employer might be asking you for all the investment proofs to claim the deductions if you are following your tax as per old tax regime, so that the tax liability can be assessed and accordingly the TDS can be deducted for that financial year. And many a times, because of laziness, or we don't have the information on time, or we don't know what deductions are eligible, we don't submit those investment proofs to the employer. The result, the employer deducts higher TDS. If you are not taking those deductions while filing ITR, you are paying more taxes than you are required to. And even if you forgot to provide the requirement documents to your employer for the proof of investments or expenses to take tax deductions, and as a result more TDS has been deducted on your salary, well, you can take those deductions while filing your income tax return. After taking those deductions while filing ITR, your tax liability will be lower than what TDS has been deducted by your employer, and you will be able to claim the income tax refund of the excess tax that you have paid. So yes, filing income tax return can give you more money if you arrive at your tax liability correctly, file your return, e-verify your return, and then the tax refund will come to your bank account. If you have made this mistake, let us know in the comment below. Now let's discuss the second most common mistake many salary taxpayers make, and that is thinking that salary income is the only income and they have to only file ITR 1 and not disclose any other income, howsoever small or big it may be. With my 10 years of experience and filing thousands of ITRs, I know this as the common mistake many taxpayers make. As like salaried people, they just think that salary income is the only income that they need to file in their ITR, and they don't have any investments and they don't earn any interest because the interest on FD is not received until maturity. And if you don't have anything, I don't blame you, because these are the things which we have not been taught in school. And if you are not from the commerce background, or if you don't know anything about finances, these are not the things that you might know already. So this video is a way that we want to give you that financial education that you need, so that you can take all the right action with respect to your income and save your taxes as much as you can and comply with the tax requirements that you need to know about. Even if you don't really have any really big income from other sources or from investments or a rental income, and you thinking that only your work salary is your only income that you need to report in your ITR, could be a big mistake. You still need to consider your income from all other sources, your side hustle, howsoever small it may be, and declare it in your income tax return. And even you also need to report any exempt income that you earn. This could be any gifts received from relatives, any interest that you earn from public provident funds. You have to report all of your exempt income while filing your income tax return. You should also download your Form 26AS and see if you have received any other income on which tax has been deducted. You want to make sure that you are reporting all the income that are reflecting in your Form 26AS and are not missing any income which is being reflected in your Form 26AS. If you don't know how to download Form 26AS, we have a video on this channel and we will link it on the cards above. Now let's move to the third most common mistake that many salaried people make while filing their ITR, and that is not filing ITR thinking that TDS has already been deducted on all of their income. Whether it is income from interest, bank has deducted the TDS on that, and income from salary, your employer has already deducted tax on that. I have a friend of mine who have called me and said that, Sonia, I have not filed my return up till now, even though I have been working for last 10 years, thinking that my taxes have already been paid and I don't have to file my income tax return. Guess what has happened with her? She received a notice from income tax department years later after earning that income, and the tax department has charged her that you have concealed your income and have not reported your income that we have come to know from other sources, and now you have to pay tax on that income, plus you have to pay interest, and you also have to pay penalty for concealment of income and not filing your income tax return. You don't want to get any such notices years later in the future, after even you have finished spending the money that you have earned in those financial years. So even if you think that your employer has deducted full TDS on your income and there is no other tax liability that you need to pay, if you are earning more than 2,50,000 in a financial year, you need to mandatorily file your income tax return. Failing to do so will attract a lot of interest and penalties, and you don't want to go there. And now, while you file your income tax return, don't miss the second point that I shared earlier, and also disclose all other exempt income and any other income that you are earning apart from your salary. While discussing about the exempt income, the fourth common mistake that many salaried people make while filing their income tax return is not showing interest income in their ITR. Now, you might think that interest from saving bank account is exempt up to 10,000 rupees, so you don't have to show the interest income in your ITR. But this is very wrong, because the way it works is you have to disclose the income in your income from other sources of the entire income from saving bank account that you are earning, or even interest from any FDs that you are earning, and the deduction that you get towards interest on saving bank account up to 10,000 rupees. And for senior citizens, they get deduction on interest on saving bank account and FDs up to 50,000 rupees. These are deducted in a separate section under section 80 TTA and TTB. If you want to know more about what tax deductions are available to you as an individual, I have a tax guide which I highly recommend you download and make sure that you are taking care of all the tax deductions that are available to you as an employee and as an individual. So every salaried employee will definitely have a saving bank account, and every saving bank account gets you some interest at 4% or higher every quarter of the financial year. So if you are not reporting any interest from saving bank account, it is a clear concealment of income and your ITR will be considered as wrong, or it may be considered as invalid, and where you are not disclosing all of your income. So you don't want to file a wrong ITR even by not disclosing the income correctly. So even if showing your interest from saving bank account does not have any impact on your taxes, if you're not earning interest more than 10,000 rupees, you will have to disclose those income in your ITR and then claim those deductions. So I hope our points will save you a lot of money and a lot of hassle in the future by filing your income tax returns correctly. And with this, let's see what's our final mistake that many salaried people make. And that is the fifth most common mistake that many salaried people make while filing their ITR, and that is not reporting income from any previous employer that they have earned within this same financial year. So it might happen that you change your job in the month of April or May, and you have earned a salary income from your previous employer for first 2 months and from the second employer for the rest of the 10 months. Now your first employer might not have deducted TDS on that salary that you have earned for the first 2 months, because the total salary that you have earned might not have crossed 2,50,000 rupees, and hence they have not deducted TDS. But after considering salary from both of your employers, your income is crossing more than 2,50,000 rupees, and you have to pay tax on the salary that you have earned from your first employer as well as the salary from your second employer. And many people don't show it just to save the tax on that income on which your employer has not deducted TDS. And so in case if you have switched your jobs during the financial year, you want to make sure that you are disclosing income from salary from both the employers in your ITR and paying the taxes on it. You want to also take one step ahead and disclose your salary from your previous employer to your next employer so that they can deduct the TDS correctly while paying you at the end of the financial year. So you don't have to pay any taxes at the time of filing your income tax return. If you don't want to disclose your previous salary drawn to the next employer, you might want to pay any advance tax before the end of that financial year to save on any interest costs that you need to pay at the time of filing your income tax return. And you should also get Form 16 from your previous employer and match the numbers with your Form 26AS to avoid any mismatch between what you are reporting in your ITR and what income is reflecting in your Form 26AS. So now you know what mistakes not to make while filing your ITR. You need to file an ITR even though TDS is already fully deducted and your salary income is not your only income. You should always declare any interest that you have earned, saving bank account, FD, or any other income that you have earned from other sources like gifts, income from investments, income from rent, or anything. Make a note of any other money that you have received in the current year and disclose them in your income tax return. And also declare the salary that you have received from your previous employer and try to claim your investment deductions even if you forgot to declare those investment proofs to your employer while deducting the TDS. If you like this video, don't forget to hit the like button and share this video with your friends who are earning their income as salary, because you don't want them to also make the same mistakes that you might have made in the past. And subscribe to this channel because we share with you all the things that you need to know to improve your financial literacy and save lakhs of money on taxes. Check out rest of our videos where we have explained you all the other mistakes that you need to avoid when you are earning income from capital gain, income from house property, and income from other sources. You can also download our guide on tax deductions for employees. The link of that is given in the description below, and you can also download our checklist for filing your income tax return as an individual. The link of that also is given in the description below. Now that you are done watching this video, don't forget to check out our other videos in the mistake series while filing income tax return, and I will see you in the other video. Bye for now.